Why is owning an insurance company so profitable? There are several major different types of insurance offered to consumers, among them auto insurance, homeowners insurance, health insurance, and life insurance. Typically, an insurer's cost structure can be broken down into four components: loss payout, payment for losses incurred by policyholders' loss adjustment expenses, costs incurred for investigation and settling of claims, underwriting expenses, costs of acquiring new business and figuring out what to charge, operations, all other costs necessary to keep the business running, overhead. Typical profit margins of large publicly held insurers as of the 1st of August 2014 are: Progressive, 6.18%; The Hartford Financial Services Group, 3.03%; Allstate, 6.85%; Erie, 2.77%. Since the profit margins for these popular companies are in the neighborhood of 5%, I would not classify these companies as extremely profitable, given their size. Similarly, oil companies are often considered extremely profitable, but likewise the profit margins are often in the neighborhood of 5%, and it is their large size that makes the profit appear very large, but relative to the size of the business the profits are average. The largest insurance companies do take advantage of economies of scale, which help them get to their present size. All else being equal, a larger insurance company will be able to improve their operations, devote more resources into appropriate product pricing, acquire more profitable customers and reject unprofitable ones, have better name recognition, and might be able to take advantage of their size to negotiate special rates with service providers, lowering their loss payouts. Some insurance companies might be able to temporarily generate a higher than expected profit in the short term by underpricing their policies and taking on more risk than they can handle. An example of this situation would be insuring homes that are on the ocean in an area that has a hurricane once every 10 years. For 9 years, the company could generate enormous profits and grow quickly by charging below market rates for hurricane insurance, attracting business from the other insurance companies. Since there would be no claims in those 9 years and they would be underfunding their reserves, their profits might appear to be fantastic. However, by underpricing the risk in this manner, during the 10th year when the hurricane hits, the company could be forced out of business due to inadequate reserves because the amount of risk was underestimated. A similar situation could occur in the case that a company underprices life insurance for young people and does not have to pay out until many years later when people start dying earlier than expected, costing the insurance company more money due to the risk being underpriced. I have been an insurance agent as well as an insurance customer. I have seen good and poor companies. I have seen life insurance companies ask no medical questions upon purchasing and denying insurance payout upon death, finding some medical background excuse from something years earlier as a reason not to pay life insurance for a term, and disappears. Life insurance for life until a few months' premium not paid. I have seen a number of companies change their names, addresses, ownerships, lost to the deceased's family. I have seen homeowners insurance to rewrite and have every clause in the world to basically deny any liability. I have seen employers refuse to administer paperwork for a work-related death of an employee. I have seen misleading deck pages not clearly written so they can deny later as stated in their separate fine print pages. I have seen legitimate claims with no guidance on how to proceed or what items are covered. Yes, one gets a quick phone answer and claim number as required by law, then it all stops. I have seen TV ads claiming the insurance company covered backyard bears or swimming dogs, but only because they had not thought to write a clause to deny liability for bears and dogs. And I have seen wonderful companies of a neighbor to step in and pay damages for a house next door. Or pay for every issue possible, real or not, in a homeowner's claim. I have seen empty highways around the world, no car insurance needed, but no full refund. Highway from Lake California. I have seen wonderful advertising for Medicare to convert to their wonderful plan. Then step up and sorry, that $4,000 pill not covered and a lot more you had, no longer covered. From what I have seen paid into companies, I would say, yes, very profitable for the company selling the product. And if not it, who's cooking the books? It isn't always very profitable. The profitability of an insurance company is largely determined by market conditions, investment strategy, and to a very minor degree underwriting profit-loss. If the investment strategy and the market conditions are right, then insurers can turn a good profit. However, since they are required to invest in rather secure investment vehicles, their actual profit margins are not normally very high. The raw numbers seem very high because large insurers are investing a huge amount of money. However, if you were to look at the returns for small insurers, you would find that their profits seem rather insignificant.